Good morning, everybody. Welcome to another day with Serene Education. It's Chris here, and I'm just going to be going with the four majors this morning, starting with the Euro against US dollar for the 21st of May 2012. Okay, so what did we see? Friday we had a nice bullish engulfing. This happening to occur around the 265 area, which happened to be price support and resistance. And noticeable that you can quite clearly see as we headed into this price support here that we saw back in early January. A lot of selling the past couple of weeks into this area, and psychologically people have taken profit now, and we've seen this major pullback occurring. So where's it likely to go to? Asian market session last night, we saw slight negativity heading into it, but we've seen a bit of buying now going into the European session. How far will this pullback go is something to take heed. So as you can see now, the high here of the start of the sell-off to the bottom here at 1265, which happens to be the bounce, you can see that the 23.6% fib pullback retracement area has been targeted. It was targeted on Friday, and it was targeted last night on the Asian session. Close above that would see potentially for price to move towards the 38.2 and 50 and the 61%. You notice the CTC on our daily is still negative. We saw a lot of selling recently, and this has given us an all sell signal on our CTC counter cash system. Red arrow, red candles, and the CTC on the other side is very much red. Moving average all above price in coalition. What we want to do, if we want to see this to continue to be bearish, we do need to see that 1265 being breached. On the occurrence that 1265 is breached, you can see that we have a lot of space. Another 400 pip drop, apparently roughly around the 1221.50 mark. So there's a lot of movement here to see if we get that break below the 1265. Until such time as 1265 is breached, then we're looking at bearish consolidation at this area. So a break above 23, then we could see further buying sentiment up towards 38.2, and like you heard, a break below above 38.2 would take us to 50. Failing to do so, a failure here at 23.6 would see price reverting back towards the 1265, and a break below that would see that 1221.50 being targeted. Moving on to cable, the same thing happened on Friday for this pair. We saw a nice little consolidation bounce here as price headed down into this negativity we've seen recently. 3 consecutive days we saw it was a Thursday, Wednesday, and Tuesday. A lot of selling in this market on this pair, and subsequently taking us back below the 1600 would happen to be a very strong price support and resistance level for this pair. Just going to make that strong so you guys can see this action. Okay, in doing so, we had higher swings here going into that all-time high. You can see higher swings depicting upside movements. CTC very much in blue as we headed higher. However, a failure to move higher than the 16,300, so price reverted to the downside, and we're looking for a potential bounce at 1600. That never came because we saw strong selling into this area here. Price did actually close on the 1600, however the following day we saw further selling, which took us right below this level, and in doing so, subsequently doing so, we've seen the CTC now in our favor because moving averages are all above price, and most importantly our CTC is not giving us a sell. So we have arrow, the candles, and the CTC on the other side going red. So everything's looking very bearish for this pair. We're now playing with the actual institution moving average. Primarily if you're trading above institution, then it's pretty much bullish. If you're trading below institution, then we're starting to look for more bearish sentiment. At the moment now, playing tic-tac with the institution moving average, we want to see further confirmation of some movement for this pair. So if it does occur, where's it likely to go to? So you take the all-time low here that we saw back in January to the high that we had, and you can see quite a noticeable pullback. So this is your low and this is your high for this time frame. This upside move, or the trend move, and you can see that 23.6 was breached. Hesitation in this area, then breach below it, then we headed towards the 38.2, straight towards the 38.2. Break below that went to 50. Now we've consolidated at 50. Got to see a break of the 50 period, 50% fib retracement area here at 1576, 7700 to see 61.8 being targeted. Break below 61.8, then we have a lot of downside movement in play. We could potentially put a 78.6 here fib, there we go, which takes us back to price support and resistance level. There's a noticeable consolidation area around here, which takes us back towards the 154500 mark. So as it stands now, to get further selling opportunities, we've got to see a break below the 50% retracement area here at 1577 or 1575. Make that 1575. By doing so, they'll be trading by all the moving average, including the most important one, the institution, and our CTC would still very much be in favor of selling. It's telling us we should be looking for nothing more than selling opportunities. And if you want to get a genuine sell, we've got to see that 50% line being breached. Onto the US dollar Swiss franc, good old Swissy. Let's see what's happening. Here we've had a pullback, a noticeable pullback after a really great run through the whole of this month, taking out prior highs, and in doing so, moving to the upside quite confidently. However, on Friday we had a nice little pullback subsequently on this pair. So we took the all-time low here that we saw back in August of last year, up to the highs that we saw at the end of December, and you can quite clearly see that the 23.6 price finding a lot of support above here, and in doing so finding a lot of support above the institution, and so a lot more buying sentiment creeping into this pair. And just recently we've seen that move to the upside, so we can take the all-time high here that we saw in December, apologies, to the low here in March, and you can see price has been steadily heading towards these projection figures over the past couple of months. What we want to see now is price staying above the 61.8. We've broken above 61.8. Okay, now we want to find price staying above this 935.50. If you can stay above 935, then it could give us an indication that we should still be looking for. This is just a consolidative pullback as people take profit of this extension to the upside, and in doing so finding a nice support over here for a reattempt at this 960. Ultimately we want to be heading back towards 960 because we've been in the past. Our CTC tells us we should be looking for nothing more than buying opportunities, and our chart's giving exactly that. All our moving averages below price, nice little crossover here. Most importantly, we have our buy signal, the candles are all blue, and the CTC is blue. So the sentiment overall is still positive to the upside, and as long as it maintains above 935, then we should still see positiveness to the upside being the case. As we head higher towards this 960, obviously you're going to see price action being more conservative in terms of price movement. Action you can see quite steady to the upside, but as we head higher, we can see a lot of indecisive sentiment. Just keep in play, or just remind yourselves, as long as 935 is below price or acting as a potential support, then we should still be looking for opportunities or buying opportunities if and when we get those candlestick patterns. Last pair of the day is the US dollar Japanese yen. Here we've seen a lot of selling over the last couple of months, and very much in doing so we've broken some major support and resistance levels along the way. That noticeably 8400, a very strong one before. 80 was a very strong one just recently over a pair of months, and that's definitely been clearly broken. So sentiment on this pair looking very negative at the moment as we head lower from prices we've just come from. So you can see the all-time low here in February. We've headed all the way up here towards the 8400 mark, and subsequently since then we've seen a lot of selling. In doing so, breaking a lot of fib retracement areas, 23.6, the 38.2, the 50. Noticeable one just recently. A lot of sideways movement, a lot of indecision, and then we've got a very nice decisive candle on the Thursday. And doing so Friday, we headed into the 61.8, and on Asian session trading last night, very, very, very small trading range, very indecisive trading. If we get below the 61.8, then we should be heading towards the 78.50 or the institution moving average, and ultimately back down towards the 78, which happens to be the very strong support and resistance level before. So we've got some definite targets here. Ideally 78.50, we get a break below 7900, close below 7900. That candle's got to close. You can see Friday's candle closed lower, how we've seen a bit of buying here. So if you're taking your low plus a spread, you wouldn't have been triggered in this one as yet. Ultimate target would be 78.50, followed by a second one here, the major one is 7800, break below 78, then we're back into this very negative consolidation range that we saw for most of this, or from August of last year right through to February. A very consolidative range, very negative range, but not really moving in any one direction. It's just been trading sideways, not very inducive to profit taking. Yes, intraday, yes, not a problem, but overall daily, not getting anywhere. So if we head towards these 78 again, then we're looking at very negative sentiment. And if that's the case, then are we going to see the Japanese government intervening, throwing some money at the problem, trying to stem this negative sentiment to the downside? That's one thing that you would have to be aware of. Keep an eye on that. We could see the lower you go for this US dollar Japanese yen pair, you could see the Japanese government stepping in with potential for austerity measures to try and stem this negativity to the downside, starting to purchase a lot of US dollars and selling their own currency, trying to get some liquidity, positive liquidity in the market. Other than that, that's it, guys, for the 4 majors. Just be aware that we had G8 summit meetings this weekend past, and everybody's in favor of trying to help the euro and Greece. Let's see if it pans out. I see the lefties out in Greece want to get together with all the big boys on the European zone. That could be interesting. That's still going to be a talking point. That's a major talking point at the moment now, is Greece. Are they in it or out? It's going to be very, very interesting. And as long as that continues, the more sentiment is still looking favorable, negative at the moment. So negative consolidative until we get some genuine sentiment from there that it's positive, or they're going to be helping to try and stem the downside move. Other than that, I hope you have a fantastic trading day. Not a lot of news out today. What have we got? We've got a lot of members. MPC member for Sterling, Mr. Putin speaking later at 8 a.m. GMT. As we speak, and that's probably an hour from now. Then we have the FOMC member Lockhart speaking at 10 or quarter past 10 a.m. GMT our time. CAD bank holiday today, so don't expect a lot of liquidity on the Canadian markets. Other than that, quite a quiet day. In fact, the sun's trying to shine through the clouds here, so it's looking for a nice bright day here in Wales. I hope it's the same for you guys across the world. Have a fantastic one. Keep your trading simple. Follow the rules of this particular template if you are using it. Keep it up. Make sure your money management is in play. And most importantly, enjoy your trading. The more simpler you keep it, the more profitable you will be, guaranteed. I'll see you tomorrow morning. Until then, trade serenely.